from the morning reading. Monday's stocks ended lower. Sharpest decline in 6 weeks. The Dow Jones Industrial Average moves back into negative territory for the year. Only one sector moved higher on Monday. XLU, XLP, and XLB were the strongest sectors, while XLY was the weakest sector. Breadth weakened as decliners led advancers 3.93 to 1 on the New York Stock Exchange and 2.31 to 1 on the NASDAQ. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:15 a.m. Central Time, and I'm recording this in preparation for the market day of November the 10th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Let's dive right into the morning report. A little bit unusual action today in that normally after a big down day, you expect the overnight usually bounces a little bit, and that's not what happened last night. We're down across all four broad market indices, though not terribly so. The S&P futures are down about 0.25%. The Russell a little less than that. NASDAQ futures are down about 0.5%, and the Dow futures are down about 0.25%. Crude oil's up about 0.75%. Euro down marginally. Bonds up marginally, and gold down, or gold rather, is up about 0.4%. And overseas action generally on the minus side. China's just below scratch. Hong Kong, though, is down more substantially, about 1.4%. Japan is up just above scratch, and Germany down about 0.5%, as is the United Kingdom. In terms of macroeconomic reports for today, for the U.S., fairly quiet. We do have import prices, mortgage delinquencies. That seems to be about it. Now tomorrow, bond market will be closed. Banks will be closed in the United States, and there aren't any significant macroeconomic reports. The regular markets will be open, but usually what happens is that you get relatively light activity with poor follow-through. And remember, bonds are actually the larger market than U.S. equities. And as a result, when the bonds are not participating, there's usually not an awful lot of direction to the regular market. So, it's like half the players have gone home kind of thing. So just kind of keep that in mind for tomorrow. In terms of the volatility conditions that we're dealing with, VIX was up yesterday, obviously, with that down action. The short-term VIX is at a 16.39, so that's the highest it's been in a little bit. Skew remains elevated. IV percentiles came up a little bit, but still are very, very low in a relative sense. 13 on the S&P, 22 on the Russell, 16 on the NASDAQ, and 22 on the Dow. We did have standard deviation moves put in by all four broad market indices yesterday. In terms of what the charts look like, we see the SPX here, obviously back into this former range. And we saw several days ago, we had this bearish engulfing on the SPX and followed through by confirmation. A little bit of an indecision candle, and then yesterday, of course, a much weaker candle, though it is of note that it bounced off the lows of the day and closed with this wick. So that is, certainly something to acknowledge for the bulls, and nowhere near as bearish a candle as it could have been if it had actually closed on these lows. So it did end up still with a one standard deviation move in that body. So you have to kind of give points to both sides. The bears won on some measures, and the bulls also won on some minor measures there to kind of dampen that effect. Now, in terms of this retracement, I mean, after 250 points, to have the most significant pullback we've had in terms of both time, this is now going into the fourth trading day since the top was put in, as well as distance. While this is the most significant of all the flag patterns we've had as we marched up, this is by no means significant enough to call into question the short or intermediate term bullish trends. This is nothing that damages that premise. In terms of some of the other indices, the Russell, of course, still playing catch up. It did not set a new intraday low yesterday. That's also of some note there. NASDAQ looks very much like the SPX, the S&P 500. Also, while it did have a standard deviation move put in, you know, these lows weren't anything scary, and the degree of pullback here is not scary at all. Dow Jones also looks very much like the SPX. Again, nothing particularly alarming here. In terms of VIX futures, the volatility futures, you know, we closed yesterday at about a 17. We're up a little bit today, but we're not even above an 18 yet. And I usually think of 18 as, you know, when things are starting to get truly a bit more fearful and serious. And I think of the range of 12 to 18 on the VIX. The regular VIX, and we'll ascribe that to the VIX futures as well. That 12 to 18 range is just kind of normal chatter, noise levels of fear within bullish market context. So nothing here to get terribly excited about. So in terms of our daily report, we have still bull flags. We're expecting that pullbacks or even corrections will be relatively shallow and not terribly deep or fearful, that we are in a overall intermediate term bull market. IBD status remains confirmed uptrend. Accumulation distribution score for the S&P a B, the NASDAQ a C. GMI index remains a 6 out of 6 with a buy signal, though it's important to note that that author remains in cash. Overall primary market condition on the big picture is a neutral bear, so that is one of the warning statuses that still remain. Decision point scoreboards, no changes. We have, in general, a short and intermediate term all bullish, long term starting to turn bullish on some metrics, but still have a number and majority to down arrows, and that kind of goes in line with this primary market condition of neutral bear. Overall consensus there is that we're in transition, perhaps a continuation pattern into a bigger picture bull. But you can't say it's all bull all the time, because clearly we have some warning signs that the longer term is in something of a bearish cast across a couple different of these mechanical signals. And if the long term, which, you know, normally that's the most powerful metric, if the long term dominates here, this could actually roll over and move into more of a bear market. Intermediate term market posture is very bullish posture with an upslope sentiment, and you see on all four indices, even after yesterday's action, they're still all very, very bullish. In fact, they're all over 90, so nothing called into question there. Position sizing opinions across both systems are still at 100%. Hedge warning status 0+, normal with some elevated risk aspects. You do see that we did have a couple more warnings flagged yesterday. We had the market decline and the sharp increase warning systems both fire with yesterday's action. No increase in distribution days, though. We're still at 4 and 2. If the S&P went to 5, that would be a warning flag. You have, with the new highs, new lows, we do have a bit of a warning there. It was over 300 on the New York Stock Exchange, setting new lows for the day, so that is a warning. Intermarket risk aversion indicators remained all 5 strongly risk on, though. And in terms of the special opinions, no changes from yesterday. While this certainly is a bit of a pullback, at this point there is nothing that says that this should be fearful or anything extraordinary. And until new information comes in, we'll treat this as just a normal bull market pullback, which often can have opportunities for entries and setting up bull flag triggers and the like. In terms of sector specific, obviously there was some damage done on the sector market postures. You see a number of the short and intermediate term especially have now flagged as neutral and down. And these are pretty sensitive, especially when the angle and direction of these isn't really established itself deeply into a long-term bull market, and we've not got that. We've got a neutral bear. So when we get some weakness that lasts more than a day or two, you start to see these things pop back down. Most important to note, which ones are holding up the best? Financials and technology, and which ones are holding up the worst? Utilities and retail. So as things go towards extremes in the oscillators, to keep in mind of which sectors are strongest and which are weakest, and make sure that your investments and trading are in alignment with those kinds of actions. As was mentioned in the morning reading, the only sector that was up yesterday was utilities. Now the prior session Friday, utilities got hammered, so this was just a mild bounce back. And of course, it is a defensive sector, and people will go to utilities when the market is strongly down. So it did, put those two factors together and put in a positive day, though it did not make up for what it had lost on Friday. Also keep in mind, if this should become something more serious, all sectors will be down. While utilities may be more defensive, it still will be negative in a bear market. So I think that's probably enough for today. As always, if what you're finding here each morning on the Falcon Global Market Preview is helpful to you in your trading, we greatly appreciate you acknowledging that and showing that appreciation. You can do that a number of ways. Obviously on YouTube, you can like it, you can subscribe to the channel. Also on Twitter and StockTwits, you can retweet to your followers. Same thing with Scootify. Obviously, as you share this with other traders that you commune with, we greatly appreciate that acknowledgement. Direct feedback can be sent to support@falconglobaltraders.com. There are a number of special opportunities available right now in coordination with the Chicago Northwest Burb Trading Club. There is a self-directed active money management class that's being put together. More details can be found at this website here. Disclaimers as always, hit the pause button if you need more time to review this, and we'll look forward to seeing you back here tomorrow morning before the market opens with the Falcon Global Market Preview. Good trading!